What's going on, everybody? I want to do a quick breakdown of NASDAQ today, some things that I was looking at, and my interpretation of the market today. So, if we're taking a look at the daily chart here, today's Monday. Monday is always a trading day for me whenever we're looking at the week of NFP. The reason I'm doing that is because with all the volatility at the end of the week there, it makes for the beginning of the week. It can offer some really nice moves there. So that's why Monday's a trading day for me, and typically what you see with a lot of ICT traders. Um, so yeah, if we're looking at the daily chart right here, technically what I saw was we were trading up into this daily SIBI right here. I had been short biased for a good bit of time now, ever since we really were trading in this daily SIBI. Once I started to see how much time we were spending in here and how high we were going up into this pair of imbalances, I began to not really trust going short, especially when I saw this down here and how well we respected that. But we began moving higher, spending a lot of time in here. Um, And if you take a look here, one thing that really stuck out to me was these three daily highs right here. Pretty much like a triple top um, as far as daily highs goes, and that's gonna draw a lot of liquidity above that. So it was hard for me to frame out shorts moving lower once I saw that. So longs kind of became the play for me here. And what I wanted to see was this daily SIBI get inverted, so trade above it, use it as support on a lower time frame, or even on the daily chart here at some point moving forward, and then a continuation higher. Um, Targets for me, higher time frame targets were, of course, the Tuesday daily highs, the previous week high. That's always an important one as far as draw and liquidity goes. And then if we were to keep moving higher above that, we had this daily SIBI right here. If you set your settlement price on, you're going to see this right here. If it's not on, you won't see that. So that's why it's important to go through them. And then if we were to go past that, I had this all-time high rejection block right there. More premium targets moving forward would be this daily swing high right here. I like the midpoint of this all-time high wick right here, and then of course the high. So that was my bias going into the day. It was longs, and that's derived from the daily time frame. Let's go ahead and take a look at the 1 hour time frame here. All right, so looking at the 1 hour time frame, if we actually look back at Thursday and Friday's action right here, or even a little bit further back, with more detail here on the 1 hour time frame now, we can see that Tuesday, this was really smooth. These highs right here, these were very smooth right here. Friday went up, failed to sweep these highs, so that was pretty much a triple top at this point. Right above that, we had this 1 hour wick right here. Really long wick resting right above these highs. So I marked out the midpoint of that. That was going to be a point of interest for me. And then this high right here, that's your previous week high. And then you have your other higher time frame premium arrays like the daily volume imbalance again, that's in purple. Um, with all of this extra space on the chart, I always scroll over, much farther left, as far left as I can go, just to have a like a roadmap. If we start to get into like no man's land up here on the 1 hour or 15-minute time frame, it helps if I look, much farther left just to have different points of reference. But again, going back to Thursday and Friday, we had a nice, a really nice pattern here, and this is really good as far as knowing how to anticipate stop hunts goes, especially when we have such a obvious draw on liquidity with these equal highs. Is buy side first at this point right here. If you have a directional bias, or I guess what I should say is whenever I have a directional bias, I want to see the first side of liquidity get taken first. So we have this range right here, right? From this high to this low. Let's get rid of this right there. So this high to this low. If I'm bullish, what I want to see is this high get taken first, just like it did right here. That's going to trigger breakout buyers who are going to place their stops below here. They trigger them in, they move it lower to take this sell side liquidity down here. So that's going to do two things. And this is why whenever you see this type of pattern, it's followed by a really aggressive move, is because it's doing two things. It's taking out the people who are trying to go long. It's inducing shorts right here. So people who are breakout selling now and who are placing stop losses above here now. So a lot of things are happening here as far as this rate on liquidity goes. Is we drop down, take that, and then we see a really strong impulse move higher. So that gave me some insight as to why to keep anticipating higher prices in combination with my higher time frame analysis. We see that this 1 hour BISI right here was created above last week's new week opening gap. Respected that, spent some time in there, and then we began moving higher to take all of our points of liquidity and meeting our premium arrays there. All right, so taking a look at Monday pre-market outlook right here. Spending a lot of time again in this 1 hour BISI. Begin moving higher right here. We have a 15-minute imbalance in combination with this order block right here. We can see price comes down into this. The bodies are respecting 50% of this imbalance, meaning they're closing above it, while the wicks do the damage, going and touching the high, or excuse me, the opening of this candle right here. That is a 15-minute bullish order block. And we continue to move higher. So this gives some good insight that at New York Open, not to expect a major retracement, but to keep on moving higher, especially when we're inside of this daily SIBI right here that we're anticipating to act as inversion, right? So that was a good sign right there. The premise of the trade and where I spent a lot of my time looking at today was when we were up in this area right here. So one thing to remember is this 15-minute BISI right here, this daily volume imbalance, and then this swing high dating back to last Thursday or a couple Thursdays ago. But nonetheless, a point of liquidity that we started to see a rejection from. So remember this area on the 15-minute time frame here, because that is what my trades were based off of today. So let's jump down to the 1-minute time frame here and take a look at it. All right, so 1-minute time frame here, opened up, premium gap, had a little retracement right here down to the upper quadrant level, and then kept on moving higher. Here's your first fair value gap of the day. Didn't see any return to that. For the first 30 minutes, didn't see any return to the midpoint of the opening range gap. So that, again, like I've said in the last couple videos, is that gives you good insight that the market could have a really strong one-sided day moving higher, which is a good sign because that's in combination with my higher time frame bias as well. It was a little bit tough for me today though, and I'll go over some losses that I took at the end of the video. It's primarily just for me to kind of talk myself through it. You can stay and watch it if you want, but I'm going to be going over the winner here first. Is we were moving higher, right? And it was tough for me because we were reaching a bunch of different points of liquidity right here, right? We had that 4-hour swing high. We were reaching that daily volume imbalance. It was a really one-sided move, and I always like to expect some kind of 10 a.m. reversal. And I started to see signs of us breaking down. But what ended up happening was, if we remember that 15-minute BISI right there, think about that bullish pattern that I just went over on the hourly time frame here, is we had buy side here taken first, right, on the 1 minute time frame. We had this obvious low right here resting right above this 15-minute BISI. So in reality, this is the range that we're looking at right here first. Okay, so this range is created, high gets taken first, triggering breakout buyers, and then they take it lower, creating the left side of the curve in a market maker buy model. So they move it lower, take sell side liquidity that's resting again above that 15-minute BISI. We see on the left side of the curve um, they are respecting bearish PD arrays. So we break down, use this SIBI and this order block to move lower. Again, break down, use this right here to move lower. And then that switch from sell program to buy program happens. And what time does it happen at? Right inside of the late AM macro. So from 10:50 right here to 11:10 right here. That is where the change in state of delivery occurs. You get signs of that, or I got signs of that, when I started to see the bodies of these candles respecting pretty much perfectly the midpoint of that 15-minute BISI right there. Okay, so that's an algorithmic signature, and then we begin to see price move higher and displacing higher. We sweep this high right here, creating this imbalance. For me, that wasn't enough. What I wanted to see was real conviction, and what would give me the real conviction is another displacement above here. So really my eye was on this imbalance because it was the last imbalance that was used to take out the liquidity right here into this imbalance. So if I saw price trade and close above that, that was going to be a good sign for me that we were going to keep on moving higher. So if I head on over to my executions here, you can see that my entry came right here. And again, that's because we had price proving to me that we're respecting bullish PD arrays. We were trading above this inversion fair value gap during our macro time right here, 10:50 to 11:10. And my higher time frame bias was telling me that price is going to keep on moving up. After we had taken liquidity, buy side first, sell side second, into the 15-minute BISI. And this is your market maker buy model, right? Because I'm using the left side of the curve right here from this high to that low, and using the PD arrays that were created along this move down as springboards to then move higher. And it gives me even more conviction whenever I see PD arrays on the buy side of the curve overlapping with the ones that are on the left side of the curve. And that's exactly why I entered right here. My stop loss was below this order block right here. Okay, so this is your order block because this is the candle that went down into this BISI, price moved higher, and it's paired with this BISI right here. Okay, so that made this a valid order block for me. So once I got triggered right here and price began moving higher, we came into a little bit of consolidation and then moved down one more time. This was okay for me. I didn't move my stop loss because we had this low right here. That was sell side liquidity. And as long as we stayed above the midpoint of this down close candle, this bullish order block, that was okay for me. So we move down, take liquidity. Again, look at the bodies respecting the midpoint of that inversion fair value gap. Again, I was still confident because we never got any close below that. So that was telling me that everything's still good to go. We're still bullish. And we had a really nice reaction from this as well. another bullish or another BISI, and then we had another bullish order block right here. My targets, the reason I had this, what you're probably thinking is completely random level, is if we take a fib from this low to this high, I used a measured move to target that negative 0.25 level because it's just this range, extend it, and that's where that level comes in right there. So I use that whenever I want to target something that's past this liquidity point right here, especially when I have conviction that price can keep on moving higher. Um, that's just like a nice low hanging fruit threshold that's past this point of liquidity right there. So that's pretty much the breakdown of this trade right here, the one that was the winner today. I took this one on a paper trading account because I took two losses on my AMP Live account, and after I take two losses, that concludes the day for me on that account. So I want to go over kind of just to finish off this video as to why I took those trades and really what I learned from them here. So I'm going to log into my live account here real quick and then we'll break it down. All right, so this is my live account here, and this part's pretty much just for me. If you have interest and made it up to this point in the video and want to keep on watching, then by all means. Um, but I just want to kind of talk myself through as to why I took these trades and what I was looking at here, really what I was thinking at this point in time. My first short was from this point right here. And the reason I took this short is because, again, I was anticipating a 10 a.m. reversal. We had the news release at 10 a.m. right here, so I wanted to wait until after the release. Um, but what ended up happening was we pushed above this 4-hour swing high right here into this daily volume imbalance. So we had a couple confluences right there, and I wanted to see if price was going to begin breaking down. If we broke down below here, that is what I considered like a change in the state of delivery. But really, what the change in the state of delivery for me was this right here, because I considered all of these consecutive up close candles right here um, a bearish order block, and then we had in combination with these two down close candles right here, that would be the breaker for me. My entry was not ideal. I went in two contracts right there, and I couldn't get my limit off in time. After I saw price trade up into it and then start to move lower, I just took the punch and said, okay, I don't need to get the exact area right there. So I think I rushed it. I think I rushed into it. Um, and so that's why my fill there was kind of crappy. And then obviously price ended up moving higher right here. My stop loss was above this imbalance because I wanted to see that act as a breakaway gap. I really wanted to see this act as a breakaway gap too. So once I started to see price move up here, um, I knew that the trade was likely to not pan out. But stop ended up getting hit right there. And I was still okay with shorts. And if I kind of break down the premise as to why I was okay with shorts again, is with this move or this gap up and this one-sided run higher. Like I said, I always like to anticipate a 10 a.m. reversal if the technicals align with it. If I was thinking about the narrative, we were just running higher and creating lows along the way right here and right here, and never had any return into like the opening range gap or this first fair value gap. So those were going to be my draws on liquidity, and I wanted to target people who were trailing their stop losses higher like this. So I had a lot of narrative and reasoning for getting into the trade, and at this point in time, I thought the technicals were aligned with it as well. So I don't really regret taking this trade. I just think that I could have had more patience by just leaving my limit where it was. And if price was going to trade off without me, then um, accepting that and not rushing my entry. But what ended up happening was they used this imbalance right here to send price higher. You can see that it touched the midpoint of that perfectly and then moved up. So they took this high one more time and then they began breaking it down again right here. This was a really nice short. I ended up not taking it, I think, out of fear because at this point, once I took this loss, I was thinking, okay, I don't want to get caught trying to short the top of a market. That's bullish because I've done that in the past and you get killed doing it where it's just going to keep making highs and highs and highs. I didn't want to fall into that again. I wanted to get real conviction. So I wanted to see this get respected. Once I saw the nice move away from it, I wanted to see price trade under this right here because I like to trade like in the range. So market maker buy and market maker sell models. If I saw a close below this imbalance right here that was used to take out the high, I would want to see it act as inversion, close below it, trade up into it, and then move lower to start to take this, trade into this imbalance right here, potentially for this low, and then best case scenario, like the first fair value gap, or getting into the opening range gap. That was my idea for targets. I liked how it was in the macro time right here from 10:50 to 11:10. Um, so my actual short and my reason for entry right here was I saw price respect to this bearish fair value gap, trade up into that, and then we did get that close below like I was anticipating. You see, this is my entry right here. It was right here. And if we go into replay right here, this is what I was seeing real time is the close below. I liked how this up close candle traded into the low of this candle. I anticipated that to be a immediate rebalance. I was looking at the midpoint of this wick right here. So I'll highlight that with a white candle. Went up into that perfectly. We failed to even close inside of this again. So I was thinking that we were very heavy right here. And I didn't even want to wait for a close below this candle that I was anticipating to be a bearish order block. I just wanted to get in as soon as we traded below the opening price right here. And so that was the reasoning for my entry right there. Um, Obviously, it went below and then didn't see any follow through, just went up right away. My stop loss was above this high right here, or right at the low of that fair value gap, because I didn't want to see any return to this. I thought it was okay if we traded or wicked into this. I didn't want to see any type of close into this because, again, then we'd be getting into above the midpoint of this inversion fair value gap in that territory, and that would tell me that it's not weak at all. And so that's really what ended up happening. So just a couple tough shorts right there, but looking back on it, I don't think that I would. I'm not going to be too hard on myself for taking those shorts. Looking at it right here, it looks like I shorted the absolute low in each of these swings, which is kind of the case. But I've shorted the same type of pattern here hundreds of times, and it's worked out. I had narrative, I had bias behind it, I had a market profile behind it, so it's a trade that I believe I would take again. But I see why longs were the way to go here. I recognized when we went from sell program to buy program, so I was happy about that. And I'm happy that I followed my rules and went from my live account to my paper trade account because you don't want to fall into the trap of revenge trading on your live account and wishing that you could have just stopped when your rules told you to do so. So that pretty much covers the trades that I took today. Hope this was helpful for someone, and yeah, that pretty much covers everything that I wanted to go over here. So see you guys on the next one. Hope you have a good rest of your night and good luck trading.